So the tagline for the GSEs is that they are a big benefit to the country because they make mortgage financing much more available for people and they keep the cost of mortgages down, and that they have created this market for longer term mortgages. Now, I think it's worth spending a little bit of time just talking about the trade-offs of the GSEs and maybe some of the controversies and criticisms. So the first is that the first order of thinking is that since the availability of mortgage financing and longer term mortgages makes housing more affordable, you could argue that over the long run, the affordability of housing has actually been negatively impacted by this availability of credit to buy homes. By making credit more available, the price of the house is also going to increase because more people can kind of afford to buy the house. So you have this market distorting effect where financial products like the 30-year mortgage, which maybe wouldn't have existed without a government subsidy, are now available. And that has the effect of, the second order effect of just causing housing to be more expensive over time because now just, the hurdles to buying a house are lower. And that hurdle is across the board for everyone that's trying to buy a house. So you're just going to have more competition. And so it could be argued that the government, as an unintended consequence of just trying to make mortgages more available, have actually made housing more unaffordable by kind of the creation of more and cheaper and longer term mortgage financing. Now, there's beneficiaries of this kind of asset appreciation because if you own a house, like many older Americans do, that bought uh, housing, especially before the GSEs became such a massive influence in the mortgage market. They have benefited from this because the houses that they bought were at during the 80s when interest rates were really high. Some people had to put 50% down or maybe had to buy their house all cash because the financing was just so unaffordable. So now they've benefited from the appreciation of their houses by the availability of cheap and long-term mortgage credit. So the incumbent real estate owners of housing are very happy with the trends in the housing prices, but the younger generation of people who are just starting out, who are trying to buy a home, are faced with kind of these very high prices. So there's a difference in who has benefited and who's paying the cost for this housing price appreciation over time, and especially over the last, you could say, uh, 30, 40, 50 years. The GSEs were also a important figure in the 2008 financial crisis and the real estate crash that kind of happened. They got much more aggressive with their lending practices, and also just the fact that they guarantee so many mortgages. When the price of housing fell dramatically, a lot of those mortgages that they guaranteed went bad and um, were causing a lot of losses to the GSEs, and basically having such a large player in the market that was basically a monopolist in the secondary mortgage market, if they kind of went out and couldn't participate in the secondary mortgage market, it would grind the whole thing to a halt because it was so dependent on this one institution, or this group of institutions that were backed by the federal government. So it was kind of like a too big to fail situation. And so the federal government, just like they had to do with the large banks, had to intervene and kind of bail them out. And so this over reliance on these too big to fail institutions was also exposed for the residential mortgage market in the 2008 financial crisis. There's also been a number of financial mismanagement and accounting scandals that have arisen over the years with the GSEs. Now that they're kind of fully managed by the government, there's going to be less public scrutiny, you can say, because, as a public company, the GSEs had to report their financial statements regularly, had to have regular disclosures. And now it's not so much the case. And, the people running these institutions now are governmental appointees, and so maybe the accountability is going to be even less than they were when they were quasi governmental. So it's to be determined whether they're going to be able to be run in a way that is accountable now to the tax holder, essentially, now that they're part of the government. And then finally, this relates to the second point we made, where the GSEs are such a large player in the secondary mortgage market that they kind of drown out any competitors from the private sector. And since they are able to operate basically by using the financial strength of the federal government, they're they can just outcompete others because they can provide these guarantees. Their cost of financing is the cheapest because when they issue these bonds, they're borrowing for a lower cost because it's essentially like the risk of the federal government is much lower, and therefore the interest rates are lower than a private entity could. So by using the state apparatus, you're kind of drowning out private sector competition, and in the long run this has led to kind of not the best and most efficient outcomes. You could look at the case of Venezuela, which has oil reserves that are on the same order of magnitude as Saudi Arabia. It's a very resource-rich country, and they did have a private kind of management of their oil refining and drilling and exploration business, and it was taken over by the state at some point during the Hugo Chavez regime. And basically, that company just became so mismanaged that this country that has this massive oil wealth is suffering from fuel shortages, gasoline shortages. So just over the course of 20, 30, 40 years, it's gone from this very productive oil and gas producer to having oil, like fuel shortages. So you can argue that the state kind of intervening in markets and running large players has not traditionally ended well, but that's to be seen. There are some talks about getting rid of Fannie and Freddie and or making them fully private and not having the government kind of back them implicitly. But these policies have yet to actually come to fruition. But that may be the future for these institutions.